Good morning, everybody. Hope everyone's doing well. Yeah, let me check something real quick. Sorry about that. All right, if y'all could let me know in the chat what the stream quality looks like. I'm getting some alerts on my end. Before we get started, just definitely let me know in the chat. Can you hear me okay? Can you see everything okay? Just put like a 1 in the chat. Good. All right, so there's no news today, just as there was no news yesterday. We have news tomorrow and Thursday. So with that being said, today may be very similar to what yesterday was and kind of be a little bit more difficult to get a grip on. It was very, very choppy, right? And we've just been dancing around. On Sunday, I talked about this pool of liquidity down here, potentially being the opposing view or the opposite end of the liquidity. So them coming down, manipulating, taking that out, then like pairing those orders with another buy position. Seems like that is the case. It's beautifully been working out. And again, what did price reach into? Right? What is the framework on that higher time frame that we've been basically referring to set up another buy or to further confirm that we will continue to buy? Daily order block. Okay. Opened up at the highs, right? Created a fractal high, dropped into the daily bullish order block, and now we're still hanging around there. So remember, the line in the sand was going to be this low for us to try to continue to catch buys, or if that's to be violated, for us to then start to maybe seek something like this. Okay, well, overall, price is still respecting this level. So is there any reason in the chart at all, aside from you having an opinion, is there anything telling you that price is willing to want to go lower versus going higher? For the moment, no, right? And it clearly looks like what I have been mentioning, price just dropped down, was in consolidation, but it manipulated lower below the open price on the weekly chart, hit this pool of liquidity down here very easily, right? The fair value gap is also available, which is also a balanced price range, right? Because sell side here, dynamic buy side overlapping the previous range on this side, overlapping fair value gap, and then pretty much it has refused to even attempt. It's attempted, obviously, to set up the retracement, but it's refused to entirely break through this. So what is that telling you? That's telling you that this daily bullish order block is still holding. And let's go look around, see if we got any S&T. We did have S&T at the highs up here, which ended up sending price lower. And again, this is all inside the context of us starting the week thinking of power of 3, knowing that narrative doesn't change on a daily basis. It changes on a larger scale when things do change. Retracements happen within like a bullish narrative. So the bias for, like yesterday, preferred to be bearish. And that bearishness was short-lived because the higher time frame is clearly being bullish. Okay, so unless this low down here is violated, which again is the line in the sand for me, I'm not going to try to, force any sells. Now I can say that if we break down below this low, given the fact that we've set this higher time frame fractal low like this, if we were to make a failure swing up at the highs and then displace below that, that's enough for me to believe that this low might get attempted, especially because we've already spent a lot of time inside this bullish order block. So yeah, if this fractal low was to be displaced below and we start to show that fair value gaps are turning into inversions, and especially if we lose this fair value gap down here, that would then turn my attention, like I said, to these relative equal lows, and that's how we would become flexible. And then whether that was going to change the entire narrative or not, obviously we'd have to see. But again, that's all just like a different scenario opposed to what we're looking at here. We want to definitely watch what price is going to do inside this fair value gap. We got, again, this daily bullish order block. So this is potentially going to be my higher time frame perspective to be able to frame out further buys and then, support larger run, maybe up to the buy side liquidity up there. Okay, so let's go start where we normally start. So the bonds here, if this continues, again, downside bonds has a downside impact on the foreign currencies, which we could see has kind of fell in order, at least for now, or it's kind of stimulated the retracement. And then we can kind of see how the downside interest for the bonds or the rejection to the downside is obviously helping support this retracement into this bullish order block. Okay, so we want to see how this is going to continue to behave. Is it going to stay above this? This is not very convincing that it's going to want to continue to go higher yet. But again, in the grand scheme of things, we're still in a consolidation for this market. So again, we can't really put too much emphasis on this asset right now because the correlation's not occurring the way that it should be. In terms of this impacting directly what the currencies are doing and the indices. That may change, right? This downside delivery continuing may end up turning the currencies to, attack the lows or a little bit further sell side in general for the currencies. And then same thing could potentially happen here if we see that bonds continue to fall and then we violate this with a strong displacement. Because, if that takes place and then say we get down below here, this low to that high may end up actually turning into a bearish balanced price range. And then again, that may send us down, further into the sell side over here after we've been so aggressive to the buy side for, pretty much the whole entire year. All-time highs have been taken, so it's not unreasonable if they were to want to do that, reject and then start to maybe seek a little bit of sell side. If we go to the weekly chart, we have a weekly fair value gap down here. The price could tap into it, and then, eventually end up continuing to go higher, right? So it could get as far as here, but long term, on this higher time frame weekly chart, in order for me to believe something like this is going to happen again, or something close to that, we would have to break down below this low, because there's an order block, fair value gap, swing low. So for the weekly chart, for the narrative to change on a weekly basis, for a more long-term, quarterly perspective, I could say, I would prefer and need to see price break down below this. Otherwise, from this time frame, even if we trade lower into the fair value gap, does that seem overly bearish to you? If you're looking at this time frame and considering this time frame is what all the lower time frames work within, you know what I mean? So, of course, looking at the daily chart, like I said, if it breaks down below this low, it may dig a little bit deeper, right? That doesn't mean it's going to change the whole entire trend just because it was to break down below that. It may, be a nice sell-off for a couple of days, maybe a whole week or two. But this down here, I believe, go to the weekly chart, that's the fair value gap here. Okay, so let me actually put that on my other chart too. Right, so yeah, it could go down there, but I'm not going to be fully behind that until I see the displacement I was just talking about. That really starts to punch lower below this low. And again, this is the weekly fair value gap here. So I wouldn't be surprised. Again, yeah, we're bullish. The order block so far is still holding, so there's no reason try to push a short, or favor that over buys because the narrative's bullish after all. But again, if we start to break down below this low here, that makes me interested in seeking the low down here. These equal lows are inside of a higher time frame weekly fair value gap that may set up a further buy again. But if this breaks, in that case, my bias, being flexible, would then go to try to seek sell side until price does another thing like this and proves that it wants to continue or is ready to continue to go higher. All right, so that's essentially some of the scenarios that I'm thinking about right now. Get this marked up. How's everyone doing this morning? Let me know in the chat. Good morning, Joan. So yeah, because there's no news, again, that automatically puts us in an assumed low probability condition. The cracking correlation with the bonds and yields versus the assets they impact. Obviously, that puts a red flag up. You just got to be aware and do not overtrade and over leverage. We're in the summer months. There's a reason that ICT took 3 months off, as he does every single year. Last year or the year before, he went to Florida with his family. And he specifically made a lesson out of that, basically saying that because he knows himself and knows the situations or times when price could be a little bit more difficult, he himself has to literally do some dramatic stuff to protect himself from himself. And that, he went as far as picking his family up and taking them away from their home for months to ensure that he's not in there trying to prove something, because that's, he has an ego. And he honestly admitted that, which is cool. So you got to be able to understand this type of thing about yourself, and then make rules and protocols around whatever weaknesses you have to try to compensate for those weaknesses and combat them so they don't hurt you. Not all of us are going to have to do that, obviously. If you manage your risk properly and you're not over trading, over leveraging crazy person, you'll be fine. Even if you do have to endure a couple losses, it's nothing really wrong with it. It's going to happen anyway. And you now know that these months, June, July, August, are some of the more harder months. Seasonally, if you go to the seasonal chart, even the seasonal chart is going sideways. It's just chopping back and forth. Let me actually go pull that up before the open happens. Where is it? So yeah, because for those that don't know, when there's no news, we will look to execute or find an opportunity when the 6:30 open comes, because that'll be used for our manipulation. Okay. So if I pull this up real quick. So May, June, July. You see, you can make an argument that there's a seasonal low that forms. If you go into the chart, you'll see that a low did form within the month of May going into June. But right here, June, somewhere in here, July, and then August, sometimes it gets a little more volatile and picks up because we're getting out of the summer months. But you could just see these lines are sideways for the most part, and they're all agreeing. These are, basically 30-year, 15-year, 5-year data that's basically overlapped, showing you when there's high probability for trending environment seasonally, and then it also shows you times when price is going to be a little bit more difficult. The chunks of price delivery or data in here that you see that either support a very strong agreement between the 3 time intervals going higher or lower, or same thing's true if you see them overlapping like this going sideways at a certain time of the year. This is a way you can anticipate what the month could potentially do based on what the price is actually doing in the chart as well, and what's happening in like real life, and we'll see, right? It's a very volatile year already, so maybe it only stalls out for a little while and then just continues to go. Maybe it doesn't stall at all and then just starts to really rampage higher still, but for the most part, this is a good rule or a good reference to have when you're going into new months, new years, because as the years pass and as you get more familiar with a tool like this, you start to go into each month with an anticipation. And if you think of Power 3, ICT has mentioned Power 3 also takes place during the yearly perspective, which you can clearly see with what we've seen this year. Okay? We've literally seen Power 3 take place on like a huge scale, right? The open of the year is right over here in January. Consolidation, manipulation to a 1-year order block, which I called the low on. And then now we've rampaged higher. So we're now a bullish year so far, and this has presented us with a bullish Power 3. This is a very interesting study for all time frames. Take the open of, whatever time frame you're on. But I definitely recommend a study on these larger ones before you get down to the like 1 hour Power 3 and, all those other Power 3s. This is extremely, extremely beneficial to understand. Power 3, it's a testament to how important Power 3 is. It's a pillar to your trading as an ICT trader, because accumulation, manipulation, distribution is literally what each price or what each candle is doing on every time frame. Doesn't matter which one you're on. And like I'm showing here, it also happens on the yearly time frame. And we called this drop, navigated the whole run lower, hit the yearly order block, and then it rallied up. Again, all that is recorded live, and I've talked about it. So if you go back and go look at the videos I've done back then, you'll see that I'm referring to many things that we talk about regularly. But we got ahead of this because it was SMT at the highs, and I anticipate Power 3 even on the yearly chart. So the first start of the year, going into somewhat of like the middle of the year or close to it, a lot of times it's going to go against what the year's going to actually do. It's not obviously a be-all end-all, but it's extremely helpful and keeps you grounded in foundational understanding of ICT concepts. If you become a master of the basics, simply the master of the basics with a model and a bias tool or process, risk management, understanding how to target, and keep it simple, you'll be surprised at what you can do. You don't have to know everything to be spectacular. You know what I mean? So given what we see here, again, like I said, it seems as though we may leave this available. We have taken the buy side, so again, that's going to be it's going to be impactful. It may look to retrace because it swept all-time highs, and everyone's on a level of euphoria that's insane. People thought the world was ending, and looks like it was just manipulation using Power 3 for the market, at least. They never let a catastrophe go to waste, right? These people that run the world, so it seems like that was the case here, for the year. They basically used wars and instability and all this other stuff and used it as an excuse to really go against many people, make everybody hysterical, and just for price to turn around and start going higher again. So like I said, we're going to monitor how this low either gets left intact or gets traded through, stays intact or gets traded through. If it stays intact and we can get above this up here, then again, my eyes are up here, and we have relative equal highs here too from the previous days, so that may end up being something that we see get violated. We have a new week opening gap in here. We have another one down here. And then we have that all-time high up here. All right, so yeah. If we move up to the 8 hour, you can see there's a bullish order block here. So again, if we leave this low, we continue to support this daily bullish order block, and we can get above this order block here, we can now use this nested 8-hour order block, the new wick opening gap, and this fair value gap. Oh shit. What is that? Dude, that was a spider. That was crazy. That thing just surprised the hell out of me. Holy crap. But yeah. Oh man. That was wild. Yeah, what was I saying? So yeah, the daily bullish order block and the 8-hour bullish order block. We're going to watch that, see if it can get above that. And if it can leave this low intact, we'll be all right. All right, and we'll just continue to go higher. New wick opening gap. All these nested areas. We do have an overlapping delivery in here, so you got to be very cautious. And it could just bounce around in there. So we're going to keep these things in mind. If we look at this other one with a little bit more details, go like this. So you see little orange lines in there? Those are first presented fair value gaps. All right, so those are things that you can carry around as more dynamic levels in price for response. So you carry them from the previous days, even from previous weeks. They act pretty dynamic. So, of course, it's not something that you like solely think about, right? It's just it's an addition to whatever it is that you already do. Right, so 1 hour looks like this. So yeah, DXY just took it's been taking a pretty strong run. So let's actually go back to bonds and yields. So we got the bonds dropping. Looks like the yields are still supporting the bullishness, which again, we had levels mapped out to watch and see if it was going to support the run higher or if it was going to go lower. And it seems as though this low and these lower areas I was talking about on Sunday, seems like they're being respected and we're actually getting above this volume imbalance. So again, this is pretty significant, right? If this is going to continue, this has a bullish impact or a positive impact on the DXY and a negative impact or a downside interest pushed upon the indices and foreign currencies. And this one, of course, does the opposite of that. It actually positively impacts or is positively correlated to the foreign currencies, GU and EU, and the indices as well. So if this goes lower and we find reasons to see DXY continue to rage higher, and we see reasons for this to want to continue going lower, which may end up being the case, so we'll have to be flexible. If that is the case, though, and we see price break down below this and respect these levels I mentioned up here, again, we're going to be able to then be flexible and then try to seek the other interest down to the sell side towards this weekly fair value gap. But again, if everything stays intact and it continues and holds these levels like I've been talking about, then again, we have buy-side liquidity up here. The narrative's still bullish, even if price was going to get down to the weekly fair value gap, because the weekly chart wouldn't have been changed just yet until we really start to, I'd say close below this weekly fair value gap. Okay, and then again, since we're on this higher time frame, this perspective is putting us in line with possible large shifts or changes in overall narrative. And we have to keep this in mind as we're navigating the lower time frames. Otherwise, we'll be like everybody else getting fooled with a decline when price just turns around and continues to go higher and was just setting up the further run to the buy side. Okay, so again, we're still in a range and we're going to have to continue to monitor what this is going to want to do. If we look at the low here, we do have SMT at the lows, which that is pretty interesting. So yeah, does everything make sense so far, you guys? Damn, I'm still thinking about that spider that You just surprised the crap out of me. Yeah, let me know in the chat if everything makes sense so far. If you understand what I'm looking at, what my overall understanding is right now, or what I'm looking at. So just let me know in the chat. Makes sense. All right, cool. Okay, what about the other seven people online? Let me know. The regular trading hours gap. Oh yeah, I didn't even look at the regular trading hours gap yet. So yeah, we got that regular trading hours gap. We do have relative equal highs up here. DXY is definitely not fully interested yet in going lower. So yeah, we're looking at this lower time frame now. I mean, we see very clean equal highs. It's kind of interesting if they leave that available. Maybe it can drop them. Yeah, I want to see if that could be the case. I want to see if it is going to want to drop then go higher. For now though, right, we're in a range, and we got to see what price is going to want to do based on what I talked about over here. Right, this fair value gap in here is going to be very important. Let's actually go to this chart, go to the 8-hour, go throw that on here as well if I don't have it. So let me, right, so let's go back to the 1 minute. So yeah, we're trading back down to the regular trading hours gap midpoint. It's pretty large, so we need to see what the reaction is going to be from here. Oh, no worries, Freddie. So yeah, I'm just basically looking to see if this low gets left intact, and then we use this daily bullish order block to go higher, or if we consolidate. If it holds and starts to push higher again and get above this, we're definitely set to continue going really strongly to the buy side. If we were to break down, basically disrespect this fair value gap, get down below this low here, and basically make this order block here and the daily one invalid for now, I would then look to want to position ourselves to target the weekly fair value gap for the week. Otherwise, again, if that holds, we're going to continue to go higher. I'm going to support that idea first and foremost, just in case, because we don't want to go against a strong wave that's moving in one direction. We need full confirmation, which in this case would be these levels holding and getting below this low. That would confirm potential interest to want to go lower and attack the low here and the fair value gap. But again, if it holds here, which is going to be the initial idea, and what I want to see get supported, then we'll end up continuing just to go higher. This will end up being a bullish power 3. We have taken all-time highs, so there is a pretty decent likelihood that price may want to try to look for a pretty strong decline and maybe come back to this weekly fair value gap. So I'm not, too married one side or the other. We are inside of equilibrium if you go from this low to that high, and price is kind of stuck, right? So we're in the middle of two possible scenarios here. Narrative-wise, it's still bullish, but we are in a moment in time where the possibility of us wanting to retrace is definitely not something to put aside. So again, if things start to align with that, then that's something that we will get involved in, and it may very well show us that. It's too early in the session right now for me to make any too assertive assumptions. So again, we're inside this higher time frame PD array that's clearly been holding up until this point. So we're going to see if this stop hunt down here can hold and then turn price back to the buy side. Okay. So yeah, I hope that makes sense. And then again, if we lose this low, my attention goes to the weekly fair value gap. So this here, I want to see if this is going to behave in terms of a retracement to go higher. We got relative equal highs up there. Let's go look at the other indices. It looks like it had a failure here, broke down. We do have relative equal lows down here for the S&P. So again, there is an argument for the downside to be targeted. I would just, for myself, need price to really show me, because I'm not a person that likes the counter trend trade if I don't have to. But if this starts to, provide evidence that it's going to be in a counter trend view and attack sell side after it's been so bullish, that we can make that adjustment and get in line with that. We're not concerned about missing moves. There's continuation variations of all of our models. Doesn't matter which one you use. So again, that gives you peace of mind. Like if you missed the first initial move that started like a 100-point move, okay, that's great. You're not going to get everything anyways. You know what I mean? So you might as well just submit to it and let yourself have some grace and be able to navigate continuations by just resetting the rules. Go to the lower time frame. If you miss a setup on the lower time frame, move up a little bit, and go see wherever you can find your model performing again. And then if you don't get it, so be it. It's okay. There's always another day. There's nothing wrong with it. Losses or days that you miss trades shouldn't be looked at as like an end of your career. The only way that they end up being an end of your career is if you emotionally react like too aggressively and then go in and do something stupid like over trading and over leveraging. Otherwise, it doesn't really, it shouldn't have any real impact on you. It is what it is. Yeah, that's my initial opinion, Supreme. I want to see that. But again, if we can't get that to take place, then again, we have our contingency plan to be able to adjust to whatever price tells us. So yeah. Go to the 30-minute. So definitely want to watch this here. Yeah, we got this failure swing here. Price has broken down. Whether this is going to behave in a stop hunt to position sell side with smart money buy positions, or if it's just going to continue to tank. Obviously, again, we got to wait. We're just going to wait. We're going to let price speak a bit. We have got manipulation, consolidation, somewhat of a quick London session, I would say. Right, so it kind of, well, not necessarily. I guess it kind of moved. But again, let's observe how this is going to behave. Is it going to sweep below this and quickly get back above this high? If that happens, I will be very much interested and confident in the fact that we will attack buy side. If we do start displacing down here, again, this is not an unreasonable target down here. So yeah, we'll see what happens. 6:40, we got 10 more minutes till the macro. So yeah, we'll continue to see what's happening here. This is a very strong response off the highs up here for GBP USD. It's also respecting the BPR I mentioned, the rolling BPR from Sunday. All right, so that's it's pretty telling. We also got this wick here now. So if we take this wick, drag that out. So yeah, we'll see. We got to monitor if this is going to continue to remain below this. Like I could say that if it was to retrace and then reject again from here, I'm definitely 100% confident that we will end up targeting these lows. But now we're just basically digging into this level in here. So this is definitely going to be an important level. It is a deep discount. It's after making all-time highs or just running the current buy-side liquidity. So again, these are levels that will hold if we're going to go lower, right? This middle portion of the wick, the fair value gap in here, the disrespect of the bullish weekly order block. If all those levels continue to get, smashed through, then of course it's not unreasonable for you to then look for counter trend idea to the sell side. Right, so yeah, we'll see. This is going to be very important for us to see what happens here. Now, if it fails and goes higher, and that'll be basically a market maker sell model failing, right? And that would be very impactful. But again, if we start respecting these levels up here, continue to march lower, just like on the indices, I would be more than happy to start to target sell side. So yeah, let's see what happens. You know, so yeah, we still got very strong interest on the bonds here, which again impacts, positively correlated with the foreign currencies and indices. And this thing is just on a rampage. So DXY has a lot of jet fuel, which you could see it's positively being correlated by the yields. The yields are running higher, and the DXY is running higher, but the bonds are tanking, and we still got this uncertainty in the indices. Still hasn't fully committed to the sell side. So again, there's just stuff we got to watch. Got to wait. So again, now we got a pretty strong sweep in here. So again, we want to make sure that we monitor this. It came right back to the daily bullish order block. We have traded into the regular trading hours gap. That's what this yellow box is. And now we're respecting the midpoint of that. So we got to see what's going to happen here. So the open price is here for the day. We've now dug really strongly into that. Again, the narrative has not changed yet, right? And if this does jolt higher and continue to rage to the buy side, it's just further amplifying the importance and effectiveness of our validation principles from those higher time frames, and how holding on to your narrative on that like weekly chart, higher time frame, daily, monthly chart is so important. So you don't get fooled. This whole thing can end up being the manipulation, right? Just simply to get us below the open price to then set us up with a further buy-side delivery. Right, DXY is now giving a rejection. If we look at DXY again, we have a weekly bearish order block in here. We also have a fair value gap. And we have the quarterly fair value gap too. We traded into the middle portion of that. But like I said, the impact that the yields and bonds have, you cannot understate that. The yields are running higher. That's having a very negative impact on this. Foreign currencies and the indices are kind of just, they're kind of holding strong. The Dow, though, has had a pretty strong rejection. We do have the S&P down here. Right, so again, if we do support continuing to go higher, which is what I prefer to see, even to this moment, you know what I mean? If that all stays intact, then of course that supports it with the S&P, and we'll see price continue to go higher. And then we could simply target previous day's highs and previous week high and the previous session highs. Right, so yeah, we'll see what this is going to want to do. If we take a look at the lows in here, there's no S&T. But we have had this very strong rejection, so we want to make sure we watch what happens. Again, it's Tuesday, right? Sunday, Monday, consolidation, manipulation going into Tuesday. Tuesday, Wednesday generally is the expansion phase. Price has really not done much for the Nasdaq. The S&P, though, and the Dow definitely had a pretty protracted run to sweep out the lows. And Thursday, Friday caps the weekly range. So we'll see when we get to that point what price wants to do. But again, I'm still on the side of seeing price go higher until we are proven otherwise by breaking down. This is a very strong rejection. It's still not overly bearish. It has given a strong rejection. People probably think it topped out. It could very easily just use this as a simple optimal trade entry to then continue to go higher. And we're on the higher time frame, so of course it takes a while. And if you go to the lower time frame when something like this is happening, it's pretty convincing that, you know, price may want to go, in this case, to the downside after it's been so bullish. But when you simply zoom out, you see what the real sentiment is. You know, so you got to stay rooted in these higher time frames. This too, right? This on this time frame, right, on these lower time frames, look like it's a pretty strong move to the buy side. You know, it doesn't look like it, you know, if you're stuck on the 30-minute, it doesn't look like it has any chance to want to short. But if you go to the weekly, if you go to the daily, I mean, you could see that it's, you know, from this high to that low, it's simply just retracing for right now. It's not confirmed fully whether it's going to go higher or if it's going to, you know, disrespect the continued down move that's been taking place. You know, it simply just looks like it's been really bearish, and now it's retracing meaningfully, you know, to a very logical level. Like if you saw this on the 15-minute, would you think that that's bullish? Would you think the sells are done? You know, if you know, the answer is, you know, like it doesn't look like it's done. Like if you wouldn't see this as a bullish move on the 15-minute, why would you think differently when you're on the weekly chart? You know, it's simply just retracing until, for this weekly chart, until we break above this high. That meaningfully will turn off the sells. You know, so right now we're just simply retracing, and we got to monitor whether this is going to hold and continue to go lower. See, we may get some type of rejection that then fails to break down below this wick midpoint, right? Say it just wicks down into that, or it never comes back to it and just starts pushing, violating these levels up here. That is an indication that we may be looking to target buy side now. But it's fully confirmed when 3 PD arrays are taken out. It's a very easy way to gauge a shift or a change in the overall delivery. And it's a very, very easy way for you to continue to trust what it is that you're looking at on that higher time frame. So you're not flip-flopping like a lunatic on the lower time frame. Okay, so price is taken out, London's low, relative equal lows. Right? So go here. So let's see if we could start getting some displacement. We are getting some rejection from here. Let's go see if we can find a fair value gap in here that could be used as a possible inversion. Could probably use that. We are seeing a pretty okay rejection from here. Again, we're moving into the macro now, so we've taken sell side already, and we're going into a macro. So if it's going to want to go, right, we want to see this macro give us an interest to push away from this daily bullish order block. Because think about it, all this price delivery is nested inside that daily bullish order block on that higher time frame bullish narrative. You know, just simply retracing for now. So we don't want to be fooled. You know, I'm favoring buys, as I mentioned. I'm one-sided, but I always paint a picture that could then get us back in line with something that maybe disrespects that. That's having contingency plans. And we're respecting these levels in here. We got the overnight first 30 minutes range. We go from the low here to basically up here. This is the first 30 minutes of the open, or first 30 minutes from the open of the daily range. So if we can get above this, if we could stay above the regular trading hours gap, continue to support this daily bullish order block, and then if we could find, there's no first presented for value gap yet really either. So we need to find a first presented for value gap. No, there's nothing in there. But if we had a first presented for value gap, basically we would use the these three indications plus the 3 PD arrays idea for validation and validation to then support whatever particular move is going to take place. If we get above those three levels and we still have this daily bullish order block holding, then again, we have a very strong impact for price to go higher. And there's no reason to fear if that stuff is being stayed above and things continue to support the buy side. Now, if we get below it, the opposite is true, So then you would start to, consider trusting continued downside if the daily bullish order blocks invalidated and these three levels continue to be traded below, because then those would be acting as dynamic resistance levels. And for some reason, those three levels, the first presented for value gap, the first 30 minutes range from the open to 30 minutes beyond the open, and the regular trading hours gap. For some reason, when price gets above those, it continues going higher. If the higher time frame supports it, the same thing is true if it gets below it, if the higher time frame supports it. So that's just another one of those tools you can add to your toolkit to be able to gauge trust. All right, so we still got rejection here. This is still convincing that we're still not done going higher. It just seems to be accumulating in here below London's low inside the daily bullish order block. There's been a lot of trading within this daily bullish order block. I don't like the fact that it's hanging around it so long, but we'll see if that's going to continue to hold. But if it gets disrespected, it'll be a good example of how when price sticks around too long in a particular level, it makes it less valid, less dynamic, I should say, right? So yeah, price says taken. Let's go look at the other indices. So yeah, it's continuing to go higher. We got relative equal highs, like I mentioned earlier. So yeah, we'll keep our eyes up here, right? The macro has kicked in, right? We deliberately got down below the open price, and now price is basically accumulating below the low down there. So yeah, if DXY continues to tank, this fair value gap should be respected. This high to that low is going to have to stay intact in order for us to continue to trust this buy here. Which seems like it's going to be something worthwhile. So we'll see. So we'll see what happens. Again, if this was to get traded through, the attention would then shift to price attacking some of the sell side we've been talking about, like the equal lows down here. So I hope everything makes sense so far, guys. We've got to make sure we stay rooted in what's happening here too. This looks interesting in here. If it was to displace and get below this low here, these consecutive down candles could be dragged out and used as a potential breaker to adjust or start to adjust our mindset to seek sell side if that does take place. It's not happening right now. My attention is here with this fair value gap. So we'll see what happens inside this macro. So yeah, losing this fair value gap adjusts my opinion to then want to seek those equal lows I mentioned. Otherwise, it'll continue to go higher. from this area, or should. So we'll see. It's accumulating. We're still in consolidation. So again, we're trading inside consolidation. So given the vibes this week, like I said on Sunday, every execution until the news comes out tomorrow, also kind of depending on what's happening, our risk is cut because we're in consolidation. It's not fully committed yet. The narrative is still bullish, which is why we're favoring buys over shorts, unless it's proven otherwise. So yeah. So again, I hope everything makes sense. Again, if you guys get value from the content and you like what I do here, you appreciate the community, and you support what it is we do, don't forget to like the video, subscribe to the channel, and if you have any friends or traders that you think can add value to the conversation, or can simply get value, or just want to hang out with people that love trading as much as they do, definitely invite them. Bring them into the fold. Let's build a community that thrives on helping each other succeed. Because, that's pretty much been the goal since I really began going public with the things that I do. Right, so yeah, this here, so boom, it just took out that fair value gap. So that is not indicative of price wanting to go higher. It will now have to get back above this fair value gap in order to try to consider any type of buys. Okay, so this is pretty convincing of DXY, especially if DXY continues to go higher. But I mean, this is Nasdaq, right? So it could simply just take that out and then just bounce above with a deeper tracement. But given what we've seen so far, we're again accumulating inside this level. So there's really no opportunity other than this, and this would have resulted in a loss because my stop would have went right below this low. Or this fair value gap. So yeah, now let's watch what this does, right? Is this going to turn to an inversion and then be the setup that gets us down into the equal lows? Right. I'm not personally interested. I need to wait for a little bit more information. There is a chance, like I said, for it to short. So that's why we didn't close the door completely on that. But for me right now, this was the only thing that I would have considered, right? So now that that's turned off, I got to wait for a little bit more information going into the 7 o'clock time. So let's see what happens. We did set equal highs up here. But again, we do have those equal lows down here as well that were also left from this retracement. And the reason that opportunity that I just mentioned would have been considered, pretty strongly considered, is because look at where we're at. We're on a higher time frame daily bullish order block. So if it was going to jump, this is very much ideal for what it is that we try to look for. We find our opportunities nested inside higher time frame PD arrays, so then we can catch a large move. Sometimes, obviously, it turns against it. The interest for price to want to retrace, because we took out all-time highs and the euphoria is so aggressive and everyone's trying to buy, it just makes sense that they would want to punish people trying to be overly aggressive, or just be on this super high emotional roller coaster thinking that they're on top of the world. They would love to turn that off, right? And just really use that emotion against them. But again, this is why we keep our risk low. We know that the conditions are a little hectic. We're in the summer months, aside from everything else. And we took all-time highs, and there's a likelihood for us to want to retrace, and there's no news. So all these things considered, again, that's why we keep our risk low. We don't put a full-on amount of risk in conditions like this where, it could do some stuff that we don't anticipate. So yeah, we'll see what happens in here. I can tell you right now, if price rejects on DXY and then we can get above this high up here, that'll be where my next setup is formed. But I got to watch this wick in here. This wick could reject price if it fails to get up to the midpoint of that and it, closes here and it starts to push lower again. Again, there's a pretty strong likelihood that price may want to come down. And wait, where the hell is it? it go? Oh no, I guess it already blew out those lows. Damn. Okay, so it swept out the lows I was looking at a minute ago. We got DXY in here too, so we want to watch this fair value gap in here. If it gets above that, that should turn this area into a balanced price range, and then it should use it as support and go higher. If it rejects from here and then starts pushing lower, then that obviously supports price going lower. I'd prefer to see that happen because, again, we want to see DXY stay bearish, and we've had a very strong retracement that's now hit our higher time frame PD array. So we don't want to see, we want to see this very reactive if we're going to trust the level. That's how it is for all PD arrays you're trying to watch. It should have a strong reaction. It should not just hang around, be super lethargic. But this, with these relative equal highs up here, for us to get back into a buy interest, it's going to have to get up here. At least for me, that's what it would take. Otherwise, it's going to continue to drop. So I'm either, in this scenario, going to try to push an aggressive short and assume that it's going to go lower based on what we've seen in the failure here. Or I'm going to wait, which is what I'm going to do. I'm going to wait, sit on my hands until I can see if price wants to get up above this high, so then I can take it to the buy side. Then maybe later on in the session, if I do decide that, okay, there's something for me to take in the short, if these things continue to support that, then, there's no problem in me trying to do that. And if nothing arises, that's okay too. We're in a time where there's no news. Think about it. There hasn't been a week like this the whole entire year. It happened last year too in the summer. The summer is when news schedules like this take place, right? Little to no news. You may be asking why. Well, why are the summers like this? Well, if you were a billionaire that ran the world, wouldn't you want to be able to go on vacation? Summer is the best weather. So a lot of smart money goes on vacation. At least that's what ICT claims. And I could, you can make sense of that, and it makes sense. You know what I mean? So, yeah. So, yeah, let's watch what happens here. Again, the only way that I would look for buys is if it gets above here. Otherwise, it's going to short and just continue to apply pressure to, hypothetical pressure. There's no buying and selling pressure. It's just buying or selling interest. But it'll continue to support sell interest if we keep this high intact. Because if this high gets violated, this is an intermediate term high. Okay, when an intermediate term high is taken, generally that will continue pushing price in that direction that it took the intermediate term high. Okay, if it stays intact, that's something to use as a validation, right? In this case, for the downside here to stay intact, if we look at this current price delivery in here, we have the down wick as one PD array, the middle portion. We have the order block here, which also has a huge wick, trading both sides. And then we also have the high. So again, if this takes liquidity and then breaks 3 PD arrays in this case, inside the narrative that's bullish, in the daily order block that's bullish, that is high probability for us to then look to go to the buy side. That's a lot of overlapping things supported by the higher time frame, right? But if it does not attack that and it continues to stay below this, given how it's broken down already, it's going to continue to drop and attack sell side, especially if DXY wants to continue going higher, right? So these are just some things that I think about, some of the stuff that keeps me grounded. Like right now, I'm not looking for buys. If I'm going to take an execution, it's going to be a short, like I've been mentioning, with this stuff, basically breaking down through the level that I talked about earlier in here, right? Now we got this entire regular trading hours gap being filled. So let's watch this high too. Again, if this all continues to do this, it's going to continue to drop. You know. Thing that I don't like is the fact that we are still inside that daily bullish order block, right? It's not entirely invalidated, you know, so the chances of it finally reacting if DXY decides to want to, you know, reject from the PD array that it's at right now, which is a weekly bearish order block, I mean, the likelihood is there, you know, so you got to consider these things. But yeah, this short, you know, like I said, because the buys were off the table, if I would have taken another execution, it would have been right here to try to attack sell side for 20 to 30 points. Knowing that there is still a chance for price to use this order block on the daily chart to then continue to push higher. Right? But for now, that interest is off the table because nothing supports that right now. It's going to have to kick in line with what it's trying to do if it's going to go higher. Otherwise, again, it's going to continue to push lower. Given what we see here, at least for the time being, that is what is happening. So here's the wick midpoint. So yeah, it has been pretty dynamic. Right? We had a lot of chop to start the day, but it's opened up to the downside a bit. So again, I'm in a state of monitoring. I want to monitor what this is going to do. Because we do have a narrative or a bias or an argument for price to continue dropping, right? Given the all-time highs, you know, being swept, you know, price given this rejection, disrespecting the daily bullish order block, you know, that is definitely something that could support us targeting the lowdown here. We have that weekly fair value gap that's way down there, which could end up being the case given we've been so bullish, you know, and because the buys failed earlier, like I mentioned, shorts are the main thing that's of interest for the time being. Once it broke down below this turned into a balanced price range. All right, so this high to that low being violated, buy side delivered, sell side also overlapping fair value gaps. This created a balanced price range. And then I said if this wick here, because that's what this is, if this wick was going to hold, and if it is still going to hold, we will continue to drop given the intermediate term high has been left from up here that I mentioned. So until these levels start to get attempted again, the buys are not really on the table yet. You know, the sequence of events that need to take place for price to turn and change the state of delivery from bearish to bullish in this case, back in line with the higher time frame narrative, it's going to require some things to take place. It's a if-then scenarios, you know what I mean? Where the hell is my wick outline? Whatever. All right, so we're actually also below. Hell, where is it? We're also below this. I can't remember what I can't remember what that purple is. Okay, so this is an 8-hour fair value gap. Okay, so again, we're kind of dancing around this 8-hour fair value gap low. And again, that could end up being a resistance level. We've traded through the entire regular trading hours gap. We're now below the first presented fair value gap, which was set up in here. It took a while for that to form, huh? First presented for value gap here. So we're below all three of those levels. And like I said, if it stays below those levels, there's an interest for it to continue going lower. If it was to stay above those levels, there's an interest for it to want to go higher. For now, it's interested in going lower, right? These levels have not been taken out and price is just continuing to hold them. So in order for me to want to look for a buy, again, those are going to have to be disrespected. It's going to have to get back above these levels up here. Otherwise, the interest for me, if I was going to take an execution, would have been shorts up until this point. Once this was invalidated in here, the adjustment to go short and then target a little bit deeper, for 20 to 30 points at half risk, that would have been on the table when this was invalidated. And like I said, I pointed out this wick. The wick respected. As long as it stayed intact, it would continue to go lower. We're still, though, again, inside the daily bullish order block. So it's not a moment in time where we're like, yeah, it's for sure going to go lower or it's for sure ready to go higher. There's too many variables in the chart right now. How it's using certain PD rays, the correlation that's taking place, it's still kind of skewed. We do see that, across the board on the indices, they are definitely interested in pushing pretty strongly to these discount arrays, the ones that they're currently trading within. The S&P is in a daily fair value gap. The Nasdaq is in a daily bullish order block. And the Dow is, let me go see where the Dow's at. The Dow's also inside of a higher time frame fair value gap. So if we drag this lower, it definitely filled in the entire fair value gap. So again, nothing in here tells us that we're overwhelmingly bearish. Just because a short was offered this morning and may be offered again this week, until these higher time frame levels are taken out, we don't disregard our higher time frame narrative because it's simply accumulating in these areas for now until that is proven otherwise by basically breaking through those levels and just really rampaging to the downside. Right? See, I hope it makes sense how I'm navigating things, my mindset. Again, unless something displaces back to the buy side here, I'm uninterested in taking buys because nothing in my model or rules or anything I operate within is in play right now. There's no shift in market structure. Intermarket relationships are still broken, at least between the DXY and the indices. And so we got to wait. We got to wait. And if price shows up finally, we'll be ready for it. But there's too many variables for us to just get in and assume and pick a high or pick a low. So yeah, let's see what happens. Let's watch this high. I'm definitely got my eyes above this high here. We got delivery to the downside. If it overlaps that, we got to see that as a potential order block or change in state of delivery if it breaks this fractal high. And then we'll see what happens if price can get up above here and then give us that 5-minute setup for a bullish breaker. And that will be the only time I look to execute. If it doesn't do that, I'm uninterested. If you guys don't have a juicer, you got to get a juicer. Shit is amazing. Forgot how I figured, who I heard it from, but man, it is amazing. Yeah, we could see the DXY is definitely interested in following what the yields are doing. The yields going higher are definitely having a strong impact as far as where price is going here. And it's making it hard for the currencies and the indices to really have a strong movement to the buy side. It's holding them down. So yeah, again, guys, I want you to make sure that you guys that are here watching and here to learn and really looking to soak up the different elements that allow for consistency and the effectiveness you see me operate with. I want you to make sure that that is going to be your main focus. If we're basically talking about stuff and teaching things and your focus is on taking an execution, like dramatically the whole call, you're not going to learn. You're going to miss a lot of the key elements that I talk about. And, just want to make sure that that's a reminder as far as, what your goal should be when you're here. Of course, it's nothing against anyone, shouting out executions and entries and stuff. But again, I want to make sure that it shouldn't be your goal to look to execute. It should be your goal being here to learn. You know what I mean? And just simply for those that are new, right? I know a lot of people jump the gun and they'll learn for like a couple months and then try to get into executions and different things like that. But there's a lot of elements that you need to make sure you're aware of if you're here, obviously, to learn and take my advice. And I don't want you guys to be distracted by things that are least important, which taking executions are least of your worries. Because if you don't have these other elements and understanding to build clarity and trust, like behind what it is you're trying to do, you're not going to learn. You're not going to be able to build the trust, and you're going to be on this hamster wheel that has huge euphoria and then huge declines. So yeah, again, we're still inside this daily bullish order block, right? So there is a chance for it to continue to go. But again, we need to wait if we're following rules, specifically, like a breaker or a YouTube model or, any of the other models. There's things that have to take place. And then of course there's turtle soups as well. Turtle soups may have provided a SMT. I don't really see anything that justifies that. But yeah. So yeah, what I'm looking for to be able to get back in line with buys, if that does take place, which none of that shows right now, I'm going to have to see a shift in market structure back to the buy side. Like shift above here at least, and then turn this level, like this delivery here, into a potential balanced price range. If we do end up supporting buys and it gets above here and starts pushing, this will turn into a market maker buy model. Consolidation up here, accumulation, reaccumulation, smart money reversal potentially. From the daily bullish order block, which you could clearly see it's nicely respecting that, which is why buys have not been shut off, and higher time frames within that, right? It's looking for a run higher. It's just been shorting a little bit deeper, seeking whatever it's been seeking in here, which it seems that it was seeking the open of the daily bullish order block. But again, we'll see. I need a little more evidence for us to try to position for a buy. And again, if it doesn't offer it, then again, shorts are still intact. Nothing has triggered the buys to turn off yet, or the sells to turn off yet. So you see why I didn't take a buy? So we got to make sure we wait. So the rules I talk about, the rules I mentioned, have yet again shined. In terms of me assuming that there's going to be a buy potentially setting up. My rules, waiting for the things that I wait for, kept me out of a loss, kept me out of a break-even trade right now, kept me out of overly thinking about an execution when price is doing things that we need to pay attention to gauge whether it's going to support continued downside or continued buy side given the condition. So it came down, swept this. I can say that this run on stops here, if we were to displace above these highs, that would potentially be enough. If we could get DXY to displace lower as well, that may be enough for me to assume this as a potential market maker buy model. For now, though, nothing has supported that at all. Not yet. I see the framework for it. We do got this wick here too, so let's watch that. Let's see the other indices. There is SMT here at the lows there, so let's see if we can get DXY to displace. Again, this is the 1 minute, so obviously, got to take it with a grain of salt. Again, my preference is to see us get above this high up here, turn this into a bullish breaker, and then, of course, like I mentioned, this consolidation to the down movement, that could set up a market maker buy model using the daily bullish order block. All right, but again, none of that has taken place. So buys are not of interest right now until that happens. And I mean, you could see why. The foresight and anticipation for certain things to take place. Otherwise, it'll be an invalid opportunity, like this potential buy was here. I mean, it just shows that the rules that I talk about keep us out of bad situations. And it's really good to see times like this because it shows you why the things I talk about work the way that they do, and why it's important for you to consider applying some of the things that I talk about. You won't use everything I talk about. Some stuff may not make sense to you. It may not be effective for you, but that's just the nature of you being a human being, learning how to do something like trading. It's very personal. I'm not here to sway opinions, but there are things that are non-negotiable, like invalidation principles, the way that we call bias and narrative. All that stuff has nothing to do with a overall, like a model to execute, which is the most personal aspect of trading, at least in ICT concepts. And so nothing has turned sells off yet, so for me, though, if I would have taken this short that I talked about as a possibility earlier, if I would have taken that once I decided that this was going to be invalidated when it closed through that, aside from, well, if I was still inside this, I would have just taken that. That's all I would have taken. And I would have got out of the market. I don't care if that would be 30 points or not, but it was. It was exactly 30 points, a little bit beyond. But this would have been, the only thing. I talked about this too as a possible buy if it was going to continue. The accumulation below the sell side liquidity, London session, accumulation in the daily bullish order block, right? Obviously that got turned off, but this is essentially what I would want to look for. If we could get something like, this and then this displacement leaving a fair value gap that maybe breaks above the high here, that may kick us back in line with something, slowly turning bullish on the heels of this decline here. It's still supported by the higher time frame, right? The daily bullish order block. But again, if we look at the other indices here, I mean, it doesn't really look like anything is overly interested in trying to push higher, at least for now. So again, we're in overlapping conditions. You see how price is going sideways? This is why I've been talking about this condition and how we need to operate, what we need to look at, all these different critical elements. That's why I've been talking about them. And the rules that I talk about, today is a beautiful example of why they're effective and what they can help you, how they can help you navigate. They keep you out of bad trades. This one opportunity failed in here. I did not choose to take a short. And then now we're over here trying to wait and see what's happening. Sells have not been turned off, like I mentioned, unless the buys were taken out, right? And has that happened? No. So what would be the opinion if I was looking to try to execute in an aggressive capacity? Because that's how I classify this right now. These are aggressive sells going in a counter trend view. They're obviously working out, right? Because the levels I've mentioned that should hold if it's going to continue to drop are still holding. Buys are off the table for now until certain things happen. It's the if-then scenario or factor that you're basically being able to, study right now based on my experience. And it's very nicely showed that we're on the right side of the market with perspective. But yeah, this here was a pretty decent decline. It's held up all these levels. So the things that would invalidate the short idea based on what we're looking at has not come to fruition, which again is why I didn't even mention a buy or anything related to it, because this is a likelihood of what I was anticipating. It's not enough for me to think, yeah, let me go execute, because it's not something that I want to push in. I started the session talking about that, and then the initial idea, the one that I would have preferred to push price higher, that being in here, right? The failure to break down the run-on stops here, 3 drives pattern below the London's low here in the daily bullish order block. Possible displacement using the fair value gap. That failed. So again, nothing outside of that was being talked about unless it was this short. And even this short, I still wouldn't have trusted it. It's already delivered. I'm still trying to see and gauge whether we have an interest to want to go higher. It clearly is showing that it's going to leave these equal lows, at least for now, This doesn't mean that it's going to leave them throughout the whole session. It may go into the PM session and finally rip people's face off to the buy side, and then, in fact, turn this into the market maker buy model I said that it may turn into. But again, for now, that is not in the cards yet. The if-then scenario needs to take place. It's going to have to run higher. It's going to have to break above here in order for us to support that. Otherwise, again, it's going to continue to drop. So this is going to continue to short, and we're going to continue to try to seek downside. This fair value gap needs to hold. This low to that high, the middle portion should act as a BPR. And we should be able to respect these levels and show little to no emphasis to try to get up here. But yeah, you guys, does everything I've talked about make sense? Is it a bit eye-opening to see some of the validation and invalidation principles not only provide assistance on the higher time frame for bias and narrative on a larger scale, but also in terms of managing trades? When you're in a trade, when you're looking at the lower time frame, trying to identify what should hold price, or when I should consider changing my opinion, or start to consider changing my opinion. Does that overall logic make sense, right? As far as like why I didn't look for buys, right? What kept me from doing that? What would have kicked me into assuming potential buys? Yeah, it makes sense. All right, cool, Tyler. Because again, this is the most important stuff. Executions are the least of your worries, because that falls into place. What doesn't fall into place is understanding price deeply. So then when you execute, or when you're reading price, you're able to then translate what the story is, rather than just moving off of opinion or how you feel about something or another. So again, we want to watch this high here, right? If this stays intact, again, this low to that high, the middle portion should be a balanced price range. If it's going to continue dropping, this fair value gap should hold, and we should not take out the buy side up here. If this fair value gap's taken, this range here is overlapped, and we take the buy side out here, again, there's a chance for this to be a market maker buy model. Tyler said monthly inversion for value gap plus daily order block looks nice on DXY. Yeah, exactly. We're pulling in, if you look at the weekly chart to keep it even more clean, we're really just trading into, and we overlap this fair value gap. I don't really like that. So that may be one red flag out of the 3 PD arrays. But we are trading into this. Okay, so we got this wick, we got the order block, and we got from this high to that low, it may be reaching for a premium. And it's also, working the upper range of that quarterly fair value gap, which is that blue line there, or the blue box, I should say. Right, so yeah, it's at a point where it could give a turnaround. It's also inside the 20 and 60 day cast forward for the IPTA data range quarterly shift adjustments, or a quarterly shift anticipation tool. So we got to see, is this what's going to occur? Are we going to start raging higher as a result of that? Is this going to be the seasonal low that forms, right? That changes the overall sentiment? Because again, the quarter just started last month. And so all this delivery to the downside could very easily turn into just manipulation within the power of 3 on the quarterly chart. So you see how deep you could take power of 3, and it helps you move forward. It takes time to obviously merge all that stuff together, but hopefully it makes sense, or makes enough sense, so then you guys can see the importance of it and start spending a lot of time there, looking at these higher time frame principles. Right, so again, just gonna wait and see what's gonna happen here. We've now overlapped this, so that's nice. That's pretty nice. Let's see what happens here. Can we sweep this low? And again, since it came down here, if it is going to rip higher, this is going to be a very, very fast move to the buy side. But again, we have to still wait for our shift in market structure. We've got to wait for our model to form. We can't just get in just because we feel like it's going to go up, because then that's an easy way to, hurt yourself. You know, we do got a shift here in the S&P. Shift in market structure here. We got the overlap. So remember, this low to that high should act as a BPR if it's going to hold. It's not. So guess what? We may be kicking in line with our overall change to go higher. So now we also got this as a bullish order block. See how it's still respecting the daily bullish order block? See, notice how it quickly just ripped people's face off. That's a very good sign that price is still inside the higher time frame bullish narrative. This is, in my opinion, now going to be classified as a potential market maker buy model. Again, we want to see DXY give us a decline. Okay, and it is. So that's nice. Yeah, let's continue to see what happens here. It's really ripping to the buy side. Again, this is it's a very good sign. It shows you what I've been waiting for, you know, and this is why I didn't take some dramatic short. You see why? You see how the things that I talk about, how it's protected us and it's given us the ability to wait for the proper time to engage, you know, assuming that your model takes place. On the 32nd, the YouTube model definitely took place. A breaker model took place, right? So breaker, drag that out. You know, run on stops here, shift the market structure, fair value gap, boom. Rooted inside of the daily bullish order block. So this may be, you know, assuming that we'll finally break out of the consolidation, you know, this may end up getting us all the way up to these equal highs I've been talking about all morning, or the highs that I pointed out to start the day. What I wanted to see attacked when we were over here. We're now going to potentially get above the first presented for value gap. So let's see if we can do that. Again, we are inside of a range-bound environment for the time being. Right? If we go to the daily chart, again, we have these overlapping candles. Whenever we have this, you got to be very cautious. This is not a trending environment. Okay, we're overlapping higher time frame candles. If you go from this high to that low, we're still inside of a range accumulating into this daily order block. You know, nothing tells us bearishness is upon us until something dramatic happens. Right? But, you know, there is still a likelihood for us to continue running to the buy side because that hasn't changed. The narrative bullish has not changed. So the shorts have been short in nature. You know what I mean? Now we're getting above the first presented for value gap. Sorry, I'm looking at something real quick. Wow. So yeah, it's nice to see everything work out, right? see if we can get it to go even higher. Execution here, take profit up there. I think that's the most ideal, or at least take most of it off and then just keep something at break even. Again, we are still in that sideways movement. It is Tuesday. We have now set a low on a pretty decent day within the overall weekly range. So yeah, so has everything made sense so far, you guys, in terms of the timing, in terms of all the different stuff that we've talked about? Beautiful, beautiful delivery has taken place here. And my target is right up there. So yet again, the streak continues. We had one opportunity that resulted negatively, but of course we kept our composure as always. As I try to make sure that I showcase to you guys. And then right when opportunity arose, the strike was available right there. Again, I'm not here to put you in trades. I'm here to teach you the concepts so then you can make that decision on your own. But I can say that I did engage this for value gap. I'll show you the executions in a minute. And yeah. See if we can get that baby to run all the way up there. So if we take, again, this is a market maker buy model. This is absolutely supporting that assumption. I talked about that well over here when prices, coming into here, and the likelihood of this potentially forming a market maker buy model if we broke this high, this turning into a bullish breaker, which is the opinion I took. And I mean, it's just absolutely amazing. So yeah, let's see if we can rip. Notice how it's ripping people's face off right here. It had everybody fooled thinking, oh, it's going to go lower. It doesn't want to go higher. And they just said, okay, well, the time came and bang, they just ripped their face off. Only gave two small opportunities, one down here at the breaker and then the other one here at the accumulation / distribution area. I can say that we should not spend too much time here. If it is going to complete the market maker buy model, we should be able to quickly get above these equal highs here, which would finish off the market maker buy model. So yeah, let me know in the comments, guys, if everything has made sense. If there's anything that, maybe you're confused about today, maybe you had some struggles this morning and you need to, kind of work through them and get some advice or something like that. Let me know in the chat if you have any things to say about what we've witnessed today, what we've done. Did you take an execution? If so, where did you take the execution? How did you feel about it? And yeah, let's have a conversation about what's been going on. Dang, Supreme, you went wild. Holy crap, dude. And nice. Only took a break even. Okay. Yeah, remember what I always say too, bro. You want to manage the highs and lows. A win should not make you go through the roof. Same as a loss should not make you feel like you fell through the floor. You want to be very level-headed. You see how I'm in a trade winning right now, I think over 100 points, and I'm very calm. I'm not ecstatic. It's just another day at the job. This is something it took me the entire time of me trading to learn how to manage, because that is a weapon that gets used against you. The emotional stimulation that comes from the dopamine that pumps when you get something right as a trader. It's the same as a gambler. The same emotions are tugged at. So Gotta make sure that you manage the highs and lows. Good job though, if you executed and did take some off or had a successful experience. Hope for you too that it made sense. Hope you were able to catch a lot of the stuff I've been talking about that led me to take in that execution, that kept me away from the break-even trade that you mentioned earlier. So yeah, hopefully that stuff made sense. Oh, nice. Okay, I'll go check that out in a little bit. Appreciate that. And my pleasure, bro. Appreciate you hopping on, sharing some of the things you've been doing. But again, hopefully everything's made sense today. You're able to take some stuff away from it. But yeah. Price is turning around a bit. See what happens. We just got this wick here. Still above the first presented for value gap. Seems like it may be coming down to sweep out this small swing low that's available right there. It's tapping right back into that daily bullish order block. So again, this should be able to create this or treat this as a balanced price range, and it should not have to come too deep. It should leave this available. Maybe not entirely, maybe it trades a bit into it, but it should be able to leave this fair value gap available given the BPR. It should be able to treat it as such. Assuming that we're not going to consolidate the whole freaking day, which it could happen given the fact that the higher time frame is overlapping sideways and there's no news, right? It may wait till tomorrow to give something significant and just, you know, set the sentiment today and yesterday for tomorrow and Thursday to explode, giving us like a Wednesday or Thursday reversal of some kind. Delicious. But like I said, if y'all don't have a juicer, what are you doing? You gotta go get you a juicer. Yeah, that's nice. That's a good response there. Let's see if we can continue to get that. Let's go move up a bit more. Again, we got this as a bullish breaker. So hopefully we could still see that continue to push through that and get price to, you know, continue moving higher here. We'll see. You know, we'll see. We're in consolidation still. It just came right back to the middle of the range. So, you know, not going to have too crazy of an expectation. I don't think it's unreasonable for them to want to come up and blow these highs out on the Dow. It's seeming a lot more difficult for that to do it in the Dow, even more sloppy than the others. And of course, we got the S&P. Seems like it's still following what the Nasdaq was doing. We've purged out sell side, came right back to the middle of the range. So again, you know, we want to make sure that we are very cautious about what's going on here. You know, the anticipation isn't too aggressive. And look at that. See? So that definitely blasted. You know, this is the volatility. This is the consolidation behavior. This is the condition that we're trading in. This type of stuff is there. That's why we don't push. That's why we don't overtrade. That's why we keep our head leveled out and we do not do any of these dumb things, because the risks right now are incredible, from wars to, you know, just crazy cracks in correlation changes in the monetary system and laws and all this nonsense, there's a likelihood for price to be very unconventional. And, this type of behavior we're seeing, the condition that we generally have to endure during the summer months, again, there's a reason ICT takes 3 months off every year, because he refuses to put himself in harm's way, knowing that these are, some of the times of year that his precision is off. Even his precision's off. So you got to keep these things in mind when you want to execute during times that ICT says he doesn't even like to execute. It's not that he can't, but he just doesn't want to have to work so hard to make certain stuff happen. And this is the type of condition that, or time of the year where that type of stuff is, potentially likely to unfold. Like higher difficulty, more whipsaw, black swan events, especially nowadays. So that one ended up turning into a break even, because I did kind of hold myself above a little bit, trying to see if we can get up there. But I'm totally fine with that. So not too overly excited to do anything else. This still does not turn my attention off of the buy side. This is just simply potentially an optimal trade entry. Even more confirmed if we overlap this fair value gap in there. So we're going into the 750 macro. So let's see, this big retracement, is that literally just to set us up going into the macro to go higher? Gonna have to wait and see. First presented fair value gap, looking like it's doing a little dance real quick, still holding. Nothing has invalidated the buys yet. Go to the 10-minute. There's nothing for the moment that is screaming, okay, let's take an execution. Another one. Right, so we will continue to monitor. We have given this rejection. I mean, this is wild price delivery. So if you took an execution, if you took a loss, if you took a win, you should be done. There's no need to try to push again, because it's more than likely that you will get it wrong, and it will take you out. And yeah. There's no need to push. We have tomorrow. News comes out tomorrow. It should be fun. I'll be live in my private group, and then I'll be live with you guys again on Sunday. But I'll be mentioning whatever needs to be mentioned in Discord for you guys. So yeah, let's see what happens here. If it breaks this low, my attention goes to this low, because then I'll use this low to that high as an order block, balanced price range, and then we will take the failure to try to get up there, and the failure swing up here as a indication that this low being violated is then going to target down there. That's not available yet, right? It hasn't happened, so we're now just in a moment of waiting. So yeah, this is not indicative of trying to take a buy right now. This is very much not strongly supporting the levels that should send price to the buy side. We'll see if that changes. Again, we're in the 750 macro, so let's see what happens. Let's take a look at the lows. We got S&T at the lows. That's very interesting between the indices. Seems like there's S&T at the highs as well, with these highs and these highs in the S&P. So Just gonna have to wait and see what happens here. Again, all the more reason for us to wait and just wait for things to unfold. You know, like if it breaks above this high, that may end up setting up another opportunity to go higher. Yeah, we'll see what happens. So yeah, first presented for value gaps being traded into. All right, well, like you remember, we're inside of a macro. Okay, so we gotta watch and see what's gonna happen here. So yeah, buys are definitely off the table. And now it looks like it's just dynamically going to try to seek the sell side in here. Only way that buys will kick back in line is if we kick back above the high up here again. Otherwise, again, it's just going to continue to drop. It's been a very manipulative day, right? It came lower first, shot up to fake you out again, and started coming back down once more. It's a beautiful example of the conditions that happen when we are pretty much overlapping on that higher time frame, on the daily chart, weekly chart. These overlapping candles in consolidation delivery pretty much operates within this. The failure to finish off this market maker buy model is extremely strong for us to want to continue to drop. Look at how fast that was. If you did not position right in there and just assume that we were going to drop lower for whatever reason, above price going higher, that's the only perspective you could have had to be able to get in front of this. And even this, does this fit your rules? Right? Maybe you have a YouTube model, your assumption was bearishness, for whatever reason. Well, this could reasonably be a YouTube model in here. This one too, potentially. But these, at least for me, there's not enough information for me to have been like, all right, well, buys are off the table entirely, other than the fact that we took out all-time highs and we're retracing. But even that, we're inside of the daily bullish order block. So are you really going to just assume somehow, magically, have a crystal ball and assume that, oh, this is not going to hold? You can't determine that. You can't just assume that that's, it's not going to hold until it proves it's not going to hold. So yeah, just it is what it is in that case, So yeah, now price has taken the low. Let's move up a little. Let's go see kind of where we are at. Again, this is an 8-hour fair value gap. So we got down below this, right? I said earlier that this low here, right? Low, high, lower low, may result in a bearish breaker. It seems as though that was in fact the case. If we move up a little bit in time frame, we could see there's also a bearish order block here. And so yeah, it seems like that stuff is holding in price right now. So again, there's not a reason we could think of in the chart right now that would support us looking for buys unless something changes. What is that something? Price has to get up back above these levels in here. It's going to really have to show some effort to get up there. Otherwise, this low to that high, these consecutive down candles may result in a bearish breaker right here. All right, so let me move and clean some of this up. Okay, so this fair value gap. Got that fair value gap there. We got this large wick in here. Notice how it didn't even come up and attempt it. So yeah. So the likelihood for price to reject and seek some of the sell side as a result of the all-time high being taken. Seems like that has been, pretty much favored over the buy side, supported by the daily bullish order block, which now it obviously wants to dig deeper into it. Because that's the case, I got to wait for more information now. Because the initial idea supporting that daily bullish order block, which hasn't entirely been shaken off. It's just, again, accumulating, consolidating, being held up inside of the daily bullish order block. So it could still use this order block to push us higher to end the week. It may just need the news event coming tomorrow or on Thursday to provide us with that institutional sponsorship to then get price back up to the buy side. It's just very manipulative right now. We are still technically in the start of the month, so in the start of a new month. So, with that being said, we may continue to hold, pushing lower a little bit until it decides to finally give a displacement with institutional sponsorship to support the buy side delivery again. Because the narrative again hasn't changed. I don't care whatever is happening in here. I could care less, right? In terms of the grand scheme of things, this fits simply inside of the higher time frame narrative, which is retracing to go higher still in the bullish overall directional intention, right? So again, we have broken down below here, so we do got to consider this as a possibility, right? It could still dig a little bit deeper, maybe even target the low down here. We prefer it not to do that. We prefer it not to break through these levels over here. I prefer to see it hold in there because, the longer something holds in a particular PD array, the deeper it drives into it, the less likely it is that it's going to have a dynamic move. The less likely it is to be, effective for, in this case, catching a buy, pushing the higher time frame narrative bullish again. This is just a lot of seek and destroy, right? It dug lower, took sell stops, dug higher, took buy stops, and then came all the way back down. Now we're spending little time back below that as well. So very deceiving, very much an invitation for you to go over trade, over leverage, flip flop, back and forth, and then just try to, just force your will in the market. It wants you to do that because it'll just continue to chop your whole entire account out. So it's one of the most important things to be able to just say, all right, I'm going to not engage. I'm just going to watch. That's where I'm at right now. I'm just going to watch, right? Two opportunities that I highlighted, one price slid through it. The other one came all the way back down. It did offer the 20 to 30 handles, a little bit more than that, right? So if we go like the 30 second, talk about this fair value gap up to there, that offered, about 50 points. So the minimums were offered there based on what we've talked about today. So there was a chance for you to bag that. Trying to get us up above the high up here, which is what I wanted to do. And of course, the time that I decide to not take the partial or the minimum that I talk about, it comes back and stops me out because we're in a condition that supports that. You know what I mean? It supports the choppiness because it's in consolidation. It's accumulating in that higher time frame daily bullish order block. And look at what's happening. It's just not willing or interested to really go anywhere. We talked about the conditions being a little bit more shady right from the jump when I hopped on. And just overall on Sunday, I even mentioned Monday and Tuesday will probably be a little bit more difficult because there's, it's low probability because there's no news. And I mean, what do you know, right? It's exactly the characteristics that were anticipated have basically manifested because of the things that we've described, and that's just, it's just the way it is. You can't get mad at it. Can't get frustrated at yourself if it came back and stopped you out. If you took a loss, you can't get mad about it. It is what it is. And we're in a moment where now we got to wait for more information. This here potentially being a bearish breaker, that's now turning off. It's too aggressive pushing through that. So in reality, this being a realistic breaker that I'd be able to support, it's off the table now. We're still, though, supporting, like I said, that daily bullish order block. It's still holding throughout all this delivery. Look at what it's done. It's traded all inside that accumulation to the max inside this higher time frame PD array. We're now still inside the 7 o'clock 7:50 to 8:10 macro, the final one before the lunch hour. And it seems as though, price is interested in pulling all the way back. Now we're consolidated within this range, right? Low, high, lower, low, back into the middle. Yeah, no, it is. It is seek and destroy. Now, I mentioned we're taking buy side, taking sell side. It's unwilling to go anywhere. It's in consolidation on the higher time frame. That's why today I've mentioned right away that the risk is cut. We're not demanding too much. We need to wait for certain things to take place in order to execute. And if something doesn't happen, then something doesn't happen. Or if you take a break even or you take a loss, you don't go in and push it because it's inviting us to blow our account. And do you want to give that to them? I don't advise you to do so. Some people have to do that in order to learn, which it's unfortunate. But I can be the first one to tell you it's not required. But it's very quickly breaking through both. It's not letting anybody stay in. If you took a buy, it took you out. If you took a short, it's now taking you out here. So yeah, it's seek and destroy. When you're in consolidation, if there's no news, many times you're going to be trapped in seek and destroy, especially with cracks and correlation, like with things not aligning how they should overall in the grand scheme of things. That invites seek and destroy. Monday a lot of times provides seek and destroy, and Friday, more days with no news. It's pretty much when you see seek and destroy, they're building sentiment for something. What's that something? Most of the time, it's a news event that comes later. There's one that comes out tomorrow, and then there's another one that comes out the next day. So it may use all the price delivery from today and yesterday and Sunday to then set up for a Wednesday or Thursday reversal that then shoots price where we want it to go. That's just the nature of the weekly profiles. And in this case, we're witnessing either a Wednesday consolidation, Thursday reversal, right, or a Wednesday reversal or a Thursday reversal after price has been consolidated. If you go back and look at ICT's weekly templates, you could see this is absolutely fitting that weekly profile description when it comes to Wednesday and Thursday delivery, or even Friday sometimes, after the entire week has been consolidated. This consolidation comes off the heels of what? Us breaching and creating new all-time highs, reaching back down to a discount PD array, and then we're just accumulating in that. So that condition is why, or just those sequence of events is why this is the particular price delivery we're dealing with, plus the fact that we're in the summer months. So these are all conditional awareness pieces of information that make sense of what it is that we're witnessing here. And it tells you, don't overtrade and over leverage. With this stuff being said, you'll feel awfully dumb if you go in and try to overtrade and over leverage, because this will probably just continue. So yeah, I hope that's helpful. Because those are things that you learn through pain. It's not something that most people listen to when someone just tells them and gives them the answer to. A situation like this, a lot of people need to go blow their accounts, like I said, and it's unnecessary. It's irresponsible. It's lacking discipline, and it's letting ambition get ahead of reality. Letting your need to succeed completely fog what is currently happening. It's like you wanting to go get a kill in war, and bullets are flying everywhere, but you're just so impatient and you got to just run into the middle of the battlefield, and then your head gets blown off. I mean, you could have just waited until gunfire stopped. Why rush into the battlefield because you're so anxious to get a kill? Same with trading. Why rush into something, overtrade, over leverage, break your rules in a condition that's clearly unfavorable for a multitude of reasons? That's the thing. This is something that most people don't learn until they blow their account for 5 years. And it's like, dude, you should have just relaxed, right? Like, the market will be here tomorrow. You don't have to trade in something like this aggressively to succeed. one day is not going to end your career if you don't take a trade, or you just sit and accept a loss as you're supposed to. If you take a loss, you'll make it back if you do the right stuff. But if you overtrade and over leverage, you'll never make it back. You'll succeed eventually if you do the right things, and follow the rules and be disciplined and focus on what really matters. But you won't succeed at all if you, break the rules, do everything recklessly, and try to force your will on the market, especially in times like this. Again, this is stuff that I've had to reason with myself. I'm not like some righteous, the best trader in the world, but I do know a lot of different stuff that I dealt with. I know how I've been able to succeed in trading. I know how I've been able to help others in terms of changing their mindset and goals, and what's reasonable and attainable at first, aside from what's attainable later. So yeah. So again, these types of conditions, yesterday and today, they're very, very impactful. They're very helpful in terms of you growing as a trader, understanding how to navigate certain conditions, how to behave. Okay, like I took a trade and it came all the way back down to break even. Like I mentioned, I took the one that was over here, right? This one failed, right? But it stopped me out. And was I freaking out? Right? Was my voice shaky? Was it elevated? Right? Was I seeming panicked at all? Was I worried about it? No, because I've been here before. I know the condition we're trading within. In all honesty, I should have just not took the trade at all, or I should have just done what I always say and take down the 20 to 30 points, given the likelihood that price may not fully fill it because we're in consolidation and all the other things I mentioned about the conditions today. So technically I broke my rules. And what did it do? It kept me from turning today into a 20 to 30 point profitable trade as I normally take down regularly. It turned it from that to a break even. A little bit in profit to pay the fees, because when you trade live, you have fees. So break even means you lost money. If you hit right at break even, you're going to still have to pay the fee. Depends on how much the fees are at your broker, but that's real life trading. So you always want to secure something, even if it's, well, it depends on how much the fee is. You at least want to get $5 to $25, depending on if you're trading micros or, normal standard contracts, or E-mini contracts, I should say. So yeah. And most people can't mention that because they don't actually trade real, so they can't give you wisdom that they don't know, that they don't have to experience. So, you keep an eye out for these types of small pieces of information. If you watch other people on social media, that's a very telltale sign. If they never talk about fees and things related to actually managing a real account, they're probably not worth listening to. If they can't come out and do this in this day and age, they can't come out and be live and talk about what they're doing and, show evidence of their effectiveness, which I've done the last 6 months at 80+% accuracy with you guys and in my private group. If they can't do something close to that, not in terms of percentage, but if they're not willing to show those types of things, what are you doing listening to them? They may make good videos, it may be catchy, it may be entertaining, but you can go watch a movie to be entertained. We're here to succeed in a financial battlefield that's more than happy to make you go bankrupt. Okay? So you want to make sure you're very cautious with who you give your attention to. So yeah. But with what's happening so far, it's already beyond the final macro that I like to engage upon for the AM session. We're headed into the lunch hour. Keep your eyes on what happens above these highs up here. Let's see if we could stay above this potential balanced price range in here, because overlapping for value gaps. Run on stops, right? 1, 2, 3 drives pattern turned into a reversal. I'm still interested in potentially seeing price continue to go higher. The daily order block is still valid. So yes, there's been some shorts and whatnot, but that is being overtaken still by the reluctance for DXY to continue its rampage bullish, followed by this run on stops and aggressive move back above the swing low that was taken, which is also at a Monday's first presented fair value gap. Isn't that interesting? So I'm interested in seeing if today can finish off the buy side liquidity up here. So I'm going to finish the day off with a break even. Again, there was two chances I offered, right? I offered this as a study, right? If obviously failed, so then I talked about the wick in here that led us to supporting possible downside. I didn't execute it because, the things that I've been mentioning this morning. The fact that we worked inside this daily bullish order block, it's still valid. And you could see why I didn't take a short. So the rules kept me out of a bad trade, out of another break even or a loss. And then, of course, I executed in here, which I mentioned as it was unfolding. I said if it gets above here, this should act as a BPR, should act as a balance, should act as a breaker. We should be able to see a YouTube model continue, and this may be a market maker buy model. That ended up turning around and failing the market maker buy model. We're still in the range, bouncing sideways, but there is still, in my opinion, a likelihood for us to maybe get up here because of the daily order block holding and the narrative not being changed. Okay, seek and destroy. Hopefully the things that we've talked about today has helped you guys or helped reinforce things that you think about as a trader. It's just been a little more difficult the last 2 days, and that's to be expected with no news. It being the summer months, we're still at the start of a month. We're almost to the middle portion of the month, which should be able to see things get better. You want to think about months like this, right? Before I let you guys go. So the start of the month up until the middle portion of the month, like maybe, like the 15th-ish, 14th-ish, or like somewhere in the middle, right? The first week, maybe sometimes into the second week, is generally consolidation manipulation. Okay, power 3, right, for the monthly candle. Then the 2 middle weeks, depending on what's happening in the chart, a lot of times can end up being the strong movement towards whatever it's reaching for, right, for the narrative on the higher time frame for the month. And then the last week should be looked at as the time where price is going to cap the monthly range, basically turn against it, or has a likelihood of turning against what was happening throughout the first couple months or couple weeks, right? So that is the anatomy of the monthly power 3. See, similar to the weekly power 3, right? The weekly has Sunday, Monday, consolidation, manipulation. Tuesday, Wednesday is the middle portion of the week, which is generally the expansion of the weekly range. And then Thursday, Friday, unless up until it hits a premium array or an opposing PD array to the narrative, may present us with a retracement or TGIF for the week. Okay, so there's the anatomy of the weekly range, right? You see the comparison and how both perspectives get navigated with power 3. It makes sense too. At least I hope it makes sense. They fit on top of one another, right? And then, of course, the daily range, right? You have Asia into London. It's consolidation, manipulation. Sometimes that's the higher the low of the day in London. For the indices, a lot of times the higher low will happen during New York because it's a New York asset. But sometimes it doesn't. Sometimes the high or the low forms in London. Then, of course, as you push through London, going into the AM and PM session, the first start of the session can sometimes be either a continuation, or when we go into New York, if a PD array is met, it may actually turn price around and go into a reversal, capping the overall daily range if the high was formed or low was formed in the London session, right? So there's the anatomy of the daily range using the Asia, London, New York AM and PM session. Okay. So yeah, again, power 3 is foundational. This is why I talk about it a lot. It's why it's the only thing that I've made a series on my channel. I made a pretty solid market maker buy and sell model video as well. I may add a couple things to that, put it into a bigger series. But yeah, if you haven't watched those, definitely go check that out. Very, very helpful stuff. I have a lot of helpful things on this channel, but for the most part, the main value is going to come from what we do here on a daily basis. And then, of course, it's even more amplified in my private group because they get more calls on a weekly basis and access and private lessons based on their questions and so on and so forth. Right, so that's also an option for those that may be interested in that. If not, you could just stay here on YouTube and, you're still part of the family, and I'm grateful either way. So yeah, hope that helps you guys adjust your perspective and narrow it into some of the more important things. I hope that today and yesterday and conditions like this are eye-opening when we sit and narrate it throughout each candle, each piece of delivery, each shift in market structure, each run on stops, each piece of the overall analysis that's supported by our Sunday calls. And especially in times like this, this is extremely important to know how to think or consider a different perspective on how to think in this type of environment. Because again, this is inviting you to blow your account. They want you to think it's going higher, then smash lower. They want you to then switch and flip-flop and think it's going to go lower so they can come up and break you higher. Not realizing that it's in consolidation and all these other factors I've talked about that classify today as a low probability condition and yesterday, and a more harder environment to engage upon, which is why you got to keep your risk calibrated the way that I've mentioned. Automatically to start the day, we cut it in half, and there's only 2 opportunities that I pointed out. One pretty much worked out to secure the minimums, which again, I should have done. I made a mistake by not securing that, knowing the conditions. So see, I'm not perfect either. So it came back down and it stopped me out at break even, like with the fees covered. Right? And that's about it. Did I come in here and start demanding more trades? Did you see me panic? Did you see me think or tell you guys, yeah, let's look for more opportunities to make it back? No, because that's retarded. Okay, like it's not. It's completely unnecessary, and it will definitely plague you and make it take longer than it really has to. Okay. So yeah, I guess we'll leave it there. Like I said, it's beyond the final macro I like to trade because I'm more of a AM session specialist. I can trade beyond, I have, but again, I'm not a trader to let the charts consume my life. So we have to be able to set times where we step away, and beyond the final macro going into this time, which is 8 o'clock a.m. Pacific Standard Time or 8:10, that is generally my cutoff. So from 5:30 to 8, sometimes 8:30, depending on what's happening if I'm in a trade, generally is the cutoff. I have multiple macros in there, multiple opportunities like you saw today. And, you want to think about your stuff, your overall view and plan in that regard as well. Okay, and if you guys feel inclined to do so or are open to it, I'd like to hear from you guys. What's your trading plan? You know what I mean? Like, when do you trade? When's your cutoff? How much time do you spend on the charts? What do you study the most? What are your strengths and weaknesses? I'd really enjoy seeing those kind of messages from you guys. I'm always very curious on how you guys are doing. What I can improve on as well as a mentor, and how I can make the channel serve you best as well. So, yeah. So if you guys are open to sending me that type of stuff, definitely do so. I'll look over them today. For those that do send that stuff to me, those are in my private group. Okay, definitely gonna give y'all a call out here. I've asked a pretty decent amount of you guys to send me your trading plans. Okay, and the things that we talk about with like the list. I've only gotten, I think, like 8 of them out of the 15 I was expecting. So the remainder of the students that haven't sent it, you know who you are. Definitely send it to me because I need to look over it. Okay. And yeah. So with that being said, I'm gonna send you a DM too. Those of you that know who I'm talking to. But yeah, with that being said, guys, thanks again for always hopping on. I hope you guys continue to get value from the content. You guys are amazing. Hopefully you didn't hurt yourself today. Hopefully you took what I was saying to heart, and hopefully it protected you. And maybe you engage this, and hopefully we're able to submit to the 20 to 30 points. Unlike me, who took a break even when I could have had a profitable trade. But can't be perfect all the time, right? But yeah, so with that being said, God bless you guys. Thanks again for hopping on. Supreme, thank you for sharing your opinion today. Appreciate it. And everybody else that's hopped on, again, I'm very grateful for the time you spent with me. And with that being said, again, God bless you all, and I will see y'all on Sunday or in my free Discord or in my private group. All right? Don't do anything stupid, and I'll catch y'all on the next one.